All right. Thank you, everyone. I know this is the last session of the day. I know that energy levels tend to, there tends to be a lull in the afternoon. I appreciate everybody sticking in it, being here for this presentation. Before I dig in, because it is the last session, I just wanted to give a quick thank you to everybody who helped make this event today possible. Edward, Ben, all the organizers. It's really cool to be able to do this kind of in-person stuff again, and I think this type of interaction is really useful and important. So round of applause for all the organizers, please, who made this possible. So my name's Stephen Cole. I have been trying to figure out what this Bitcoin stuff is and why it's important since about 2013. My background is mostly computer science and internet web tech. I worked for some corporations in Silicon Valley, worked for some tiny startup companies. So I sort of came at things initially from the technology side. But I was always really interested in and passionate about money and economics and just like how all that worked and what made something good money or strong money or weak money. And so I think those two lenses, kind of the tech side and the economic side, are fascinating when you think about Bitcoin and its implications for the world. So today in my talk, I want to explore what I think is one of the most transformative pieces of Bitcoin and what it can be, and that is money for the world. I want to kind of go through whether this might be a monetary upgrade that we're experiencing and what that might look like. Bitcoin's a lot of different things to a lot of different people, right? And it's just a tool. It can be used by anyone permissionlessly. So for some people, it might be an interesting tech way to solve their tech problem. For other people, it might be a savings technology. For some, it might be a privacy technology. But I think for when you think of like global implications, I think new money is fascinating and what it could mean for society. So that is the theme for today. Quickly kind of stepping back and just gauging where we've come from, I think it's really cool to see the progress. Bitcoin is now 12 years old, and it's come a long way. So this is where it started. 2008, email from someone using the name Satoshi Nakamoto to a small list of hobbyists and cryptographers, and says, I've been working on a new electronic cash system. It's peer-to-peer, no trusted third party, and a link to the white paper. Bitcoin was born with that. And it was initially kind of teased, laughed at, dismissed, and then fast forward 12 years, and if you ask Siri right now what the national currency of El Salvador is, she will tell you very factually that it's Bitcoin. So I think that's wild to consider the progress in just a little bit over a decade. We've gone from a worthless collectible for hackers and hobbyists that was kind of thrown around willy-nilly to over $1 trillion in market cap at one point, the balance sheet of huge billion-dollar corporations, and legal tender status by a nation state. That's huge. And I think even more fascinating to consider is like, despite that amazing progress, I think we're just getting started. And it's even more fun to think about how far we have left to go and what that could do for the world. So like, what's really going on here? What's at the root of this? And what if it is an upgrade? What if this is more than just some investment, some way to amplify your dollar holdings and some way to make more bucks? What if it's not in the future going to be about making dollars? What if we are upgrading from dollars to Bitcoin? Wouldn't that be neat? I'm going to throw in a little bit of a controversial statement that I hope inspires thought. I have been focused on the venture capital space and specifically on Bitcoin, kind of the intersection of VC and Bitcoin for the last 3 years or so. A big part of my personal thesis is that the crypto and blockchain narrative is a little bit overhyped. And I think Bitcoin is way underhyped. So I'm not saying there's nothing to crypto and blockchain, but you'll have a bunch of people say, oh, Bitcoin was the first, but blockchain technology, that's the real innovation. And I think that's totally backwards. I think Bitcoin is what's really transformative for the world. And there's so much potential there relative to the amount of hype that I think that's completely inverted. So I tend to focus most of my time, energy investing on Bitcoin specifically. And in fact, companies that only support Bitcoin and no other coins. There's a term that you might hear around for that called Bitcoin maximalism. And I'm not in love with that as a label because I think labels come with a lot of baggage and a lot of assumptions, right? And people think of Bitcoin maximalists as dismissive or narrow-minded, close-minded. How can you just be so certain or so focused on Bitcoin and not think that any of these other projects have promise or anything like that? And I think it's fun in a way to kind of try to turn that upside down a little bit. When I started discovering all this stuff and trying to figure out the Bitcoin space, trying to figure out the crypto space, I went through a phase where I was super excited about all the other coins. When Ethereum launched, I remember like the early days of like being excited about Litecoin and thinking it was like silver to Bitcoin's gold. And when I look back, I realized that I kind of knew what happened in history, but I didn't know why certain things happened in history. And so these narratives about like silver and gold seemed really compelling to me because I thought, okay, there were multiple monies at one point, so why wouldn't there be multiple monies in the future? And the idea that one might dominate seemed kind of crazy because we've never had one money in history, so why would we in the future? And in a way, you could almost say that that was kind of close-minded of me. When I started, I was very close-minded, so I thought the future had to look like the past. I thought just because we had multiple monies in the past, the future had to look that way. I had to be very open-minded to become a Bitcoin maximalist. I think the possibility that the future might be one global money, and that money might be Bitcoin, that's not easy to digest. That doesn't feel natural. And so that took a lot of research and wrestling with ideas and thoughts to arrive at. Today, we've got all of these, digital currencies, cryptocurrencies, and I think a lot of people are trying to figure out, rightly so, like what protocol are we going to use for value in the future? And analogies in history are a little bit dangerous because, right, like everything only happens once, so no analogy is perfect. But I think it is interesting to examine one from a few decades ago when we were trying to figure out, especially in the 1970s, in the 1980s, what's the protocol that we're going to use for information? And that's where the internet came from. And it's easy to forget because like the internet's been around us for a big chunk of our lives now. But back in the early days, it was not obvious how this stuff was going to work and how information was going to be transferred among computers. So in the early days, there were all these different protocols that were trying to compete to be like the protocol for information. Microsoft had NetBEUI, Apple had AppleTalk, a company called Novell had like IPX and SPX. And these were huge, like these were integrated into college curriculums, they were like all around you. And the idea that one protocol for information would dominate wasn't really a popular idea back then. It was pretty contrarian to think that one of these could like really run away with the game. But that's exactly what happened. TCP/IP is the protocol that powers the internet today. And it wasn't better in all cases, but it had such strong network effects that it won. So there were all these brilliant engineers working on other protocols, and those other protocols really shined in certain use cases. And so people were debating about what's going to be the protocol for small networks and like local networks, and then that's going to be different from the protocol for the internet and big networks. But it turns out when you're exchanging information, whether it's a spoken language or computers talking to each other programmatically, the network effects matter a lot. And TCP/IP was good enough that it just didn't really make sense. It wasn't worth the effort to build a whole stack and a whole ecosystem on all these other protocols. And here we are today. Those others have all faded into obscurity, and TCP/IP runs the show. Here's a quote from a very well-known venture capitalist of A16Z. So Mark Andreessen and Ben Horowitz were the co-founders of A16Z, and they've been doing a lot of VC work for the last decade, a couple decades actually. 50% of the code base in Lotus Notes was just making all the protocols work together, which Mark Andreessen thought was ridiculous given that there was TCP/IP. And so Lotus Note, this is from back when like nobody was sure how this was going to play out. And so if you're building an app, your app had to like deal with all this. It had to speak a bunch of languages because nobody was sure what the protocol for information was going to be. And so a little bit tongue-in-cheek, I can show you another quote that I love. 50% of the code base of crypto wallets is just making all the protocols for value work, which I think is ridiculous given there's Bitcoin. That's me right now on this slide. So I think and I say that in kind of a teasing way, but I want to try to explore the idea of like, what does the future look like? And is one money the simplest configuration? And in hindsight, would that look obvious? Is this an interesting little ephemeral phase we're in right now where we have all this competition, but ultimately is one going to run away with it? I think Bitcoin's better money, and I think money's huge. It's the biggest total addressable market of any asset, really, hundreds of trillions of dollars. And to try to back that statement up, when I say Bitcoin's better money, it's important to dig into that and really say, well, what makes it better money? People have been trying to figure out what makes strong money for a long time. Aristotle kind of started this back in ancient Greece, and he tried to enumerate all the attributes that make money good or bad. And the first 3 or 4 here came from him, and then we've kind of expanded on that over history. There are traits like, is it scarce, limited in quantity? Is it portable? Is it divisible? Can you divide it up finely enough to do small transactions with it? Is it easy to verify that it is legit, hasn't been counterfeited? Trusted, so it's got a credible history behind it. People believe in it. Is it fungible, which essentially means one is like the other. It's not like $1 bill buys you more than another $1 bill. Is it durable? So that's where tulips and flowers are not useful as currency because they can't exist for too long. They'll get torn up. And then censorship resistance. Can anybody stop you from using this as money and from paying people? And I love looking at this type of fundamental breakdown because I think it tells a really interesting story. Now you'll notice there's a lot of green in the Bitcoin column, conveniently. Seems like Bitcoin's pretty strong as money, right? The areas where it's lacking, fungibility, which Carter touched on in the last presentation, and I hope to see that improve. But the area where it's weakest is it trusted? Is there a credible history behind it? And I love realizing that that is where Bitcoin, that's the only area where Bitcoin's very lacking. Because if you just phrase that a little bit differently, what it's saying is all Bitcoin needs is time. Bitcoin is already amazing money. It just needs for people to trust it. It needs more people to realize what it is, learn about it, raise awareness of it, and eventually use it to protect their value and gain more trust in the system. This is one of the most important realizations that I personally had in my Bitcoin journey, and this is from sort of the economic work of Nick Szabo, largely. It's about the adoption of new assets as money and what that monetization process looks like. And I think a lot of people dismiss Bitcoin as not being a good candidate to be money because it's not good at all these things right away. And I was guilty of that. I used to walk around San Francisco trying to spend Bitcoin in 2014, 15, and I would say oh man, you can never list prices in Bitcoin because it's too volatile. So the unit of account function, that's conceptualizing prices, listing prices. And I'd say, oh, well, I guess Bitcoin isn't good money because it's so volatile. But there's a progression to it. This monetary adoption tends to happen in phases. And the first phase is it's a collectible. Doesn't even have dollar value, doesn't have sort of monetary value. It's just thrown around as Bitcoins were in 2009 and 2010. And then eventually people might start holding on to the stuff. And it kind of gets to this point where maybe they use it as a savings technology. Maybe they use it to protect the value of their time. And only if it really knocks it out of the park as a savings technology and a store of value, then does it kind of graduate to the next phase, which is medium of exchange, like being used for payments, spending, transfers. And then only lastly is unit of account, really where it kind of becomes global money in terms of prices being listed in it and it being useful for that. Because at that point, it's graduated from the store of value phase, right? Trillions of dollars of capital might have flowed into the asset class by that point. And then it would be much less volatile than it is today. Then Elon Musk wouldn't be able to move the needle on the price just by tweeting something or by buying or selling a little bit, because even though he's a billionaire, Bitcoin could be a multi-trillion-dollar asset class. Monetary upgrades are hard to see from the inside. It's hard to see when you're in the trenches of it. There's a book called When Money Dies, and it chronicles the hyperinflation in Germany in the early 1920s, especially 1923. So the German mark was the currency, and this anecdote is a quote from that book. It's from a fish market owner in Hamburg, Germany in the 1920s. And he's talking about, we used to say the dollar is going up again, when in reality the dollar was being stable, but our mark was constantly falling. Rising prices were much more visible than the realization that the value of our money was going down. And I love thinking about that because you're not used to thinking about the value of your money changing. The money is the measuring stick. The money is what we're used to measuring the value of coffees and hamburgers and furniture and all the things we consume day to day. And we're not used to thinking about, are the prices rising because our money is getting worth less? We're used to thinking about those assets becoming worth more. And so monetary upgrades are hard to see when you're in the middle of it. What makes Bitcoin special and sets it apart? It sounds counterintuitive, it sounds like a bad thing at first, but the rules can't be changed. And that's especially a turnoff for, like in Silicon Valley, venture capital in the software industry, where it's that culture of like move fast, break things, iterate one new app after another. I think a lot of them tend to miss Bitcoin because the idea of something not changing just feels counterintuitive. But in my opinion, this is the biggest differentiator for Bitcoin. The rules cannot be changed. Only 21 million maximum ever, no matter what. That's not true of any other coin. Even if other coins have these limits encoded in them, there's often a small enough group of people who could exert influence over those systems to change those rules. How many Ethereum are there ever going to be? Nobody knows. That number, that schedule, that issuance schedule has changed multiple times throughout history. And it's probably going to change. If I were a betting man, I would bet that it's going to change more in the future. 21 million hasn't ever changed, and I don't believe it ever can change. And that really sets Bitcoin apart, that predictability. And so how does it achieve that, that security? How do we kind of rest easy knowing that there's only going to be that number? That security comes through decentralization. And I want to zoom in a little bit on this because I think there's an interesting trend happening in the industry right now where the word decentralized is getting used a lot. And decentralization isn't just technical, it's also social. So a lot of projects will show all these stats about their projects, and they'll say, it's on this many computers around the world, look at how decentralized it is. And certainly, like, if it's on a lot of servers and a lot of computers, that's wonderful, that's an aspect of decentralization, but there's a lot more to it. If one or two people control all the software on those servers, is it still decentralized? If all those servers belong to the same company, is it still decentralized? And so there are all of these kind of layers to consider when you're talking about decentralization. And there's a strong incentive for projects and companies to try to label their stuff as being decentralized because they want to be, part of this movement. They want to be hip and cool and using decentralized blockchain crypto tech. And so it's natural for them to kind of want to participate and ride that movement. But I think it gets to this place where you dilute the quality of the term decentralized. Before Bitcoin, I was focused on the cloud computing industry. And it's funny what happened there. I think there's a parallel there. Like the word cloud initially meant something very specific in internet architecture. It was a total paradigm shift in how infrastructure is managed. And it was like the Googles and AWS, Amazons of the world were building systems in a completely different way. And that was a breakthrough, but over time, everybody started putting the word cloud on their stuff. And before you know it, cloud lost a lot of its meaning. And there was this joke in the industry that, okay, cloud is like, just means somebody else's computer. That's kind of like the end state of that, right? Like cloud is just someone else's computer. That's where it got to. And what I don't want to see is for us to arrive at this place where decentralized just means more than one computer, where decentralized just means two computers. If you have something and you put it on two computers, is that decentralized? Maybe. There's no authority on it, right? But I want to encourage us as an industry to maintain a really high bar for what we consider decentralized, and especially just to remember how different Bitcoin is in some ways compared to other projects in the social decentralization that it's achieved and what makes it special. So to highlight, I have some examples from this year actually. This is all pretty recent stuff. In other projects, you can see a screenshot on the left from the homepage of a project called Thor Chain. This is a claim that their network is 100% autonomous and decentralized. And then a few weeks ago, they were hacked, they lost millions of dollars worth of Ethereum, and so they paused the network. But that's interesting, that you could pause a 100% decentralized autonomous network. Doesn't really, like, where's that pause button and who gets to press it? Same story for this project, Cream Finance, a market on Ethereum. They got hacked, they had funds stolen, and they tweeted that we have stopped the project by pausing. But what is this we stuff if you're decentralized? So they might be technically decentralized, but how socially decentralized are these projects? That's really interesting to examine. Here's an announcement about a product launch. The CEO of this Ethereum-based decentralized video platform. So decentralized platform, CEO. Those two things, you know, kind of, do they go together? I don't know. They certainly don't in Bitcoin, and there's no absolute definition of like at what point it's okay to use the word decentralized. And I'm not trying to be the one-man decentralization police here. What I'm trying to do is just for us to remember the benefit from true social decentralization, and especially from Satoshi's anonymity. Because otherwise you get a lot of this dynamic. You get a lot of claims of decentralization when really there's kind of this man behind the curtain. There's a small group, or in some cases even one CEO, one developer, who's really running the machine behind the curtain. And then you have retail investors, Dorothy and her friends over there, who are like surprised because Oz seemed really grand and everything seemed decentralized. And then you have these hacks or these events on Twitter, and then you get the little dog pulling the curtain away, and it turns out that there's a pause button and that it's more centralized than we thought. Nobody knows who Satoshi is, or who she is, or who they are, and that's awesome. We don't, and we shouldn't. That is such a powerful feature of Bitcoin. No one can coerce or bribe or blackmail Satoshi to try to change 21 million, to try to change any rules. And no other cryptocurrency is anywhere near that level of decentralization. Bitcoin's decentralization is special. And that is what gives it security. That's what makes it resistant to attack. And now where do we go from here, knowing what we know about Bitcoin as money and Bitcoin's security from decentralization? It's pretty clear that there's a push to get rid of physical cash. So I don't think any of us would dispute that the future of money seems digital, right? I doubt if you project out a decade or two in the future, you really see us carrying around pieces of metal or pieces of paper and like trading them when we walk across these imaginary lines. But the question is, what kind of digital money are we going to have in the future, in my eyes? And to me, it seems fairly binary. I really see two end states to this. Down one path, we have the path of centralization. The Federal Reserve, the government issuing their currencies, central bank digital currencies. Most dollars are already digital, but the end state, if we continue down the track we're on, is a fully digital, essentially like a Fed coin, a CBDC, a central bank digital currency. And the only real alternative that I think gives hope, at least to me, is Bitcoin. It's decentralized money. It's the opposite of that. It's instead of power being concentrated in the hands of a few, which a CBDC would be, that would put more power with a smaller group of people over the general population than we have ever had before in history. And I think these are essentially the two states that we have to decide between, and the two different futures that we can kind of work toward. And they look to me a lot like, on one hand, a lot of control. You have these chains. You have the ability of a very small group to control your money completely. And if they can control your money completely, can they control your life completely? If you can work all day and the only mechanism available to you to try to save money in is something that they can easily censor or seize or debase by printing more of, then they can kind of steal your life. They can steal your time, the value of your work and your hours in the day. And with Bitcoin, they can't. And so I think Bitcoin is the path of peace and hope and freedom and opportunity. If we are really in the middle of a monetary upgrade, if we went from seashells to gold to dollars, are we going from dollars to Bitcoin? The few what ifs that I'll leave you with are just to really consider that. If you have the ability to use Bitcoin and protect the power of your savings, what if that isn't just protecting the power of your savings? What if that's also helping protect the savings of people in El Salvador, Afghanistan, in Lebanon, places of currency crisis? What if Bitcoin isn't just an investment that you can use to make more dollars? And what if Bitcoin isn't just some other asset to get you some portfolio diversification? What if Bitcoin's better money? And what if we are upgrading to Bitcoin and we're never going back? Thanks very much. That's all I got.
1776, the U.S. has beat like Britain, ourselves in the Civil War.
Yeah.
You know, substantially. Like basically, like you can have the U.S. just come into your house like unannounced without even a warrant. Sometimes it seems, but so like this, the government or whatever you want to call it, seems to have been like the winner for a long time.
Yeah.
Like in this situation, and especially with what we've seen in the last like year and a half with like just unprecedented regulation, et cetera. I mean, there's no saying that the U.S. couldn't just say Bitcoin's illegal.
Right.
Like, and what would that look like if that was the case? Now, technically, your store value is still there, but like now you become literally a convict for trying to like transact with it or access it or whatever.
Absolutely. I'm hopeful that governments won't outlaw Bitcoin, do anything draconian. I think there is the potential for this path where we all like hold hands and gradually upgrade to better money. But it's totally possible that what you're describing, governments not wanting to give up control of the money supply, maybe they'll try to outlaw it. Maybe they'll ban it. China seems to have banned mining domestically over there. I think there are hope in a couple different ways. First of all, I think it's hard for a lot of nations to coordinate on something. So even if one took action, then some people like entrepreneurs or businesses could migrate and kind of do regulatory arbitrage to other countries and continue doing what they're doing. But even if they couldn't or didn't, I think Bitcoin just has a lot of properties that make it less vulnerable to those types of attacks. So in 1933, the US outlawed private ownership of gold. FDR issued Executive Order 6102 and said anyone who holds gold, you have to turn it in. And because gold has the properties that it has, like in that chart that we looked at with the red and yellow and green, gold is this physical thing. So it's really hard to transport long distances. It's really easy to like see when someone has gold, or especially if they're walking into a store trying to pay with gold. And Bitcoin doesn't have quite the same vulnerabilities there. I think it's a lot harder for them to enforce that type of legislation on Bitcoin, and especially in like a digital online economy, than it is with dollars. They could certainly stop like major corporations from holding it. They could stop brick and mortar establishments from using it, but they can't really stop capital from flowing into it in a lot of ways. It's actually funny if you look at the volume on some of these exchanges. When Bitcoin is outlawed in some countries, you will see a corresponding uptick in the local peer-to-peer trading activity there, because suddenly no one can buy through the big official regulated exchanges, and so they just start buying in other ways. They start buying through these less centralized platforms, and maybe that's literally like meeting another person in the Starbucks, or doing like a direct ACH transfer to some other person, but it's really hard to prevent people from interacting and Bitcoins from like flowing all over the place. So it would certainly be a bad day for the price if a government like if the US outlawed Bitcoin, the price would tank, and that'd be a bad day. But long term, I don't think they can stop it. And as wild as it sounds, I've thought a lot about, like at first I was all caught up in what governments are going to allow Bitcoin to do. And now I think a lot more about what Bitcoin's going to allow governments to do. I don't think governments can stop Bitcoin. I think that Bitcoin places an unprecedented set of constraints on government power, because their power comes from the ability to print money and to issue bonds and to kind of engineer the system such that people have to buy those bonds. And I think Bitcoin absolutely crushes those things. And so suddenly it might take us back to a place where if governments want to do stuff, they actually have to ask us for our money. And that's not anything they've had to do for a long time. And I think that could lead to a much better future.